All right, all right. For those that are getting logged in right now, both on Zoom and YouTube, welcome. We're going to kick things off right at the top of the hour. That's about 12 and a half minutes from now. Go grab a cup of coffee, get a pencil and paper, a notebook would be awesome. And we'll see you guys back here in just about 12 minutes. See you soon. All right, just under 10 minutes until we kick things off here. Welcome if you're getting logged in on Zoom, and we're also broadcasting this class live on YouTube, of all places. So we're excited to bring the first foundations of trading to YouTube. There is a link in YouTube for you to get classes 2 through 5 in there. I don't know, candidly, if that's in the comments section now or if that will be there shortly after this this live session concludes and we go back and edit it. The YouTube gremlins will be taking care of that. But if you like class 1 and you want to get classes 2 through 5, there's no charge. It's all free for the whole program, but we're not going to broadcast them all on YouTube. You'll need to register and make sure you attend on Zoom. If you're here on Zoom, no problem. You guys will be getting all the links. We had a little snafu yesterday. So we have, now we have over 600 people registered, but we had a little issue with Zoom not sending out the link or a reminder to join. So instead of having everybody in class Tuesday at the regularly appointed time, we had like 15 people there, 13 or 15. So we're doing this as a makeup class. It's live. Here we are, Wednesday. It's 12:50 Central Time, my time. Not 12:50. That clock's fast. What time is it for real? Hold on. Yeah, 12:51. I guess that's right. The timer counting down at 8 minutes had me confused. But yeah, when it goes, okay, I just had a moment there. Anyway, we're glad you're here, everybody who's live. Just a couple minutes, we'll kick things off. We'll get the cameras rolling. There's the cameras. All right. Welcome to Nashville, Tennessee. Just south of Nashville is where I'm broadcasting from. Got my friend Chris Burgess in here. Chris is another instructor at TradeSmart University, super smart guy, knows a lot about fundamental analysis and options. So if that's something you're interested in, you should definitely pick his brain about that. We've also got another Chris Beverly is in here. Chris makes everything work at TradeSmart. So all the technologies and things that are way over my head and complicated, Chris makes sure all of that works together so that we can bring a wonderful, seamless experience to you. We've got just about 7 minutes here as friends are getting logged in. I'm going to go ahead and make some final preparations on my end. I'll hop back on the microphone here in just a second. If we've got enough people in the Zoom class, we can play the where are you from game. And I can't, unfortunately, monitor YouTube. I just don't have enough monitors, believe it or not. I'm unlike a typical stock trader. I don't have 25 monitors. I have 2. And both of them are being used to broadcast right now. So YouTube, my colleagues will monitor your questions and whatnot and be sure to answer them, but I can't see them right now. So join me back here in just about 5 minutes. We're going to kick things off right at the top of the hour. We've got a full deck of content to go through, and I want to make sure we make the most of every minute. I'll see you guys back here in just a few minutes.
What's up, everybody? How you guys doing today? There's only a couple people in here right now, but that is all right. Still get a dialogue going before then. So I don't know if Josh mentioned it yet, probably not, but those of you that are in here, you actually get free access to group coaching tomorrow. We'll dive into that a little bit later and give you the details on that, but that's one of the VIP perks that we give people going through Foundations of Trading. So if you sign up for VIP, you'll get extra group coaching sessions every week. And we like to offer the first week for free so you guys can join, see if it's for you, kind of get a feel for that. And we'll give you the details on that later. But that'll be
group coaching
tomorrow.
is amazing. We did what, like 6 trades the last cycle we went through in here. And I think those 6 trades, they put a bunch of cash in people's jeans. It was a good time. Good time was had by all. This is Chris Burgess, by the way, ladies and gentlemen, if you haven't met him yet. The one, the only.
I'm doing a bow now. You just can't tell. And I assume you all are applauding me as well, as you should be.
That's how it is in my mind. Everybody's feverishly applauding. Applauding.
Yeah. Hey, if we've got a few minutes, if you're around, Josh, did you check out that thing I sent in Slack? Be cool to pull that up.
No. What did you send in Slack?
You had mentioned what I would talk about SPY in the market update. And I had a couple things that came to mind, mostly just doing some fibs on SPY. But since you're the fibs master, figured you could take a better look at it than I could. But there were some really interesting levels that we ran into. And I'd be curious to see where we're measuring up today as well.
Slack closed here. All right, so what'd you put in here? Some fibs on this. Interesting. Yeah, that is an interesting way of drawing fibs. That's my nice way of saying I might have done it a little differently.
Yeah, I had looked at a few, and this was the one that seemed to line up the most interestingly. That's why I would like to get your take on it. I am a fibs master.
This is like dangling. How do I make this analogy PG? It's very tempting for me to dive into this because I love fibs.
Hey, we got 4 minutes.
I feel like we might break some brains. All right, hold on. Jeez.
This is the kind of thing that we talk about in group coaching. And if you guys sign up for VIP, you'll get into the Slack channel where we're sharing stuff like this.
We keep my little timer here so we don't accidentally go over. So the way I would draw a fib on this is cold. I have no idea how this is going to work out. I would be looking, I don't know if it's the Ukraine invasion or if this is more of the basing. Let's just start here and start working our way backwards.
That was the first thing I tried.
Yeah. Mm-hmm. And that's about what I'd come to. And so, the challenge with fibs right now, without working into this and getting, I call it the grid. If you can imagine my fingers forming like graph paper, there's a way to work into this so that we know exactly which candlesticks we should be measuring from. But without having that homework done coming into it, we just have to wonder. Let me get a tablet that actually draws instead of my mouse. we need to kind of put a framework around where the market is. I can do this in 2 minutes. So if this is a major pivot point in a basing where Russia invaded Ukraine and we gapped down there and shot back up, and if this was the top, and I'm more certain of this, actually, this is probably the measurement here using this candlestick instead of this. There's a really smart dude out there named W.D. Gann. I forget actually, is it Gann? I think it's how he spells his last name. He's old, he's like 1930s. He's a contemporary, or maybe even a predecessor to Charles Dow, not the inventor of WD-40. I mean, with a name like that, you'd think he should have invented that, but not. But Gann told us often the secondary moves after a penultimate move are the more accurate candlesticks to be measuring from, or he used bars back then. We have modern day candlesticks. So that's why I would choose this candlestick to the right. This, I have a pretty high degree of certainty. It could also be this little candlestick right there. We could play the either or game. So for now, let's go with that. And then let's actually just tighten this up here. Nah, I'm gonna stick with what we've got. So here's what you do when you have uncertainty about which ranges we should be measuring. And if you just kind of want down and dirty Fibonacci work, I just draw boxes. I love boxes. And here's what my box would sound like. This is Scott's Fed box. That's a whole different thing we were talking about the other day with Scott Landers in the YouTube show. So right now, what we've essentially measured is what a retracement up would be, and that's assuming there would be a continuation down. That's what we measured. So we went from here back up to here. Why is he drawn from right to left? Again, like, go take the Fibs course. People are here for beginning stock info, and we're doing like master's degree stuff. And so essentially we've measured a wave down, it's coming back up, and then the question would be how far down would it go again? But here's, woo, that was exciting. Here's where this box is important. And I make this a matrix. Let's do this. I divide it into a matrix. We have obviously bullish moves and bearish moves in the market. And there's things that should be happening and things that should not be happening in each of those scenarios. So in the bullish move, all right, we should in that case, in the current scenario, break out of the box. And if the move was going to be bearish, or excuse me, if the move was not going to be bullish, we should not come back down below that box. The inverse is true if we're still in a bearish framework, right? So we've got the box that we just created. If we're bearish, it should come up into that box and head back down. What it should not do if we're bearish is continue on through that box. So essentially, if you're looking at the market saying, I wonder if we're bullish, you want to see us be above that box for the bullish move, yes. And you want to see what we should not be doing for the bearish move, which again is move through that bearish box or that retracement box. So this is a super wide range, which is compensating for the fact that we don't exactly know which range to be drawing right now. But if we were to blow through this box, I would say with near certainty that this is the beginning of the bullish trend continuing that we've had for years and years and years now. Real quickly, because I can't help myself, then we do really need to jump into content. I'm just curious what this looks like here. So this is a great example of what the bearish continuation looked like. And we could dial this in and get even more granular, but for the sake of time right now, I could pull this down. I'm not generally a fan of measuring the wicks, but there's certainly right about there. Candlesticks are new. I feel bad. Everybody who's here for brand new, just bear with me. But all these candlesticks right in here, that's definitely a price as memory, PHM. There's definitely a pivot point that happened right there. And so if we tighten that fib box up, we do get a resistance. And this would be our box. And this is where I'm going with this conversation here. Remember our matrix, right? What should we be doing if we're continuing in a bearish market? We should come back down below that box, which is what we did. And then, of course, we came way down here. So that's happening current events. I forget where the box was exactly. We were kind of about here. So if price action were to continue above that box, think bullish. If we were to come back down below that box, think bearish. Final thought on that, since Chris opened this can of worms, I blame him. If we're basing here, if this is the bottom, and it might be, I would fully expect after this aggressive bullish run that we've had now for a week, I would fully expect some profits to get distributed. the market to pull back down, and whether it comes back down here all the way, or if it comes back down part of the way and continues up, I can almost promise you that before we break through this level up here, there's going to be a retracement and an opportunity to buy some stocks on sale. So, whew, how did you get me into that? I feel like I was tricked.
Thank you for going through that, though. I did notice a quick issue real quick. I've got our ninja behind the scenes, hopefully looking into it, but I'm not sure what happened. The stream that I set up to schedule this is not the same stream that's going live right now on YouTube. So I don't want to stop the one we've got going. So I think I'm just going to cancel the other one. But I apologize to any YouTube viewers who were waiting for that one. And then we went live on a different one.
Which they can't hear you. So your apology is meaningless.
Oh, well, that's too bad.
Right? I mean, well, can they hear you? I don't know. Now I'm confused. All right, let's dive in here. And we're just a couple minutes late, but that's okay. We'll just go over 2 minutes. That's just fine. Welcome to Foundations of Trading Stocks and ETFs. This, for those that are not aware, is a makeup class because we apparently did not send out the Zoom link yesterday. That was a great idea. Register 500 people for a training and then not send them the link to join. So I taught my heart out yesterday to about 13 people that were in class, and that was probably my friends and family. So thank you for attending. So today's a makeup class. It's Wednesday, and we will continue with class 2 next week. It'll move back to Tuesday. This creates a whole host of issues, right? Some of you here on Wednesday, you're like, well, geez, it works for my Wednesday schedule, but not Tuesday. Or maybe you're catching a recording now. You're like, I could have come Tuesday, but not Wednesday. If you have an issue with the schedule, just let us know. We'll get you recordings, whatever you need to make sure that you're caught up to speed. I don't want our little technology faux pas to prevent anybody from getting access to the content. I'm just glad you're here. Before we kick things off, I need to remind you that this training is for educational purposes only. All examples and analysis are intended for that purpose and should not be considered specific investment or trading advice. Skip to that last line there. As we go through these 5 weeks together, you're going to see me place trades with a real money account. We have a public TSU account. We invite you in. You're welcome to monitor it, watch it, see our trades, whatever you want to do. And last sentence, I don't want you to think those results that I share are typical. They are actual, they're real. You're going to see them play out in real life. But I've got 25 years of experience. Chris has got decades of experience as well. I don't want you guys to think that you're going to magically take our combined experience of 30 plus years or so and create those results for yourself. So the Federal Trade Commissions appreciate when I say that. If you guys are ready to rock and roll, let's dive into class 1 of level 1, titled How to Make Money Trading Stocks and ETFs, or as I like to say, how to put cash in your jeans without going broke in the process. Today's outcome is going to be to discover the formula to make money trading consistently. Trading is not haphazard. It's not fly-by-wire. It's very formulaic in its approach. And we're going to break down that formula today so you know exactly what steps you need to take to put cash in your jeans. We're also going to decide if you want to be a trader or an investor. There's pros and cons to each. Spoiler alert, some of you may want to be both. And that's okay. You just need to make sure you're not putting trading strategies into an investment account and investment strategies into a trading account. If you do, both of those accounts are going to be sorely disappointed. We're also going to talk about the tools that you need to be successful. We're going to talk about the must-haves, the would nice to be haves, and the things that are just straight up extras that are fun to use and make trading simpler and more accurate. Lastly, we're going to talk about an introduction to charting, which is going to be our first steps into the world of analysis, and talk about the next steps you should take to make progress. We wrap up every single session with homework so that in between the times when we meet together, you're going to be able to make consistent progress. Very quickly about myself. This is a picture of me without the beard. The beard's about to come off. It was supposed to come off in March, and March is running out fast. So you may see me clean shaven like this soon. Here with my oldest daughter, Delaney. Over the last 13 years, I've had the privilege of training over 300,000 people at TradeSmart University. I learned to trade about 25 years ago. And as I began experiencing success, Others in my close circle, friends and family primarily, wanted to know what the heck I was doing. That was around the 2007 market bubble burst. And I was making money hand over fist while everybody was freaked the heck out about their retirement accounts. And so we started training a small, intimate group of people, and that grew to be over 300,000 people 13 years later. I'm grateful to the stock market for the privilege of touching those lives, and we'll talk a little bit more about that in just a second. I've worked with people that are kids, and I've worked with people that are over 80 years old. Some of those kids are my own kids. 3 of our 5, I know, 5 kids. I finally figured out what causes it. 3 of my 5 kids have gone through the very training that you are going through. They happen to have a really great accountability partner and mentor in their house. They had a little benefits. 2 of those 3 are traders. They have real money trading accounts. One of the 3 is still working to achieve some of the benchmarks that I put in place as their dad before I'll go ahead and fund an account for them. And then others are in their 80s. And what I love about the stock market is you don't have to necessarily be able to go out and work with your muscles, right? You can sit at home and work with your brain and with a computer connection. And so if you're 80, my grandfather's almost 90 years old. That's what I'm trying to say. He still trades. He's got a trading account and he loves it. He feels engaged. He feels like it's something he can do together with me. And he's very, very good at it. To that end, I've worked with people that have small accounts and I've worked with people that have huge accounts. And I say this because I want you to know, regardless of your account size, there is a place in the stock market for you. The stock market is account size agnostic, especially here in the United States, where we have $0 commissions on stock trades. It didn't used to be this way. I used to have to recommend a $5,000 or greater account because by the time you paid the commissions, if you didn't have that size of an account, in order to correctly position size your trades so that you're managing risk appropriately, you would not have any cash at the end of the day by the time you paid the commissions out. But with $0 commissions, it's a complete game changer. And I start all my kids off with $1,500 accounts, and I make them go through kind of a proving phase before we go ahead and increase that amount for them. If you've got over $1 million, you can trade $1 million account. I'm not saying that you can't, but when you get up into those levels, you start running into some interesting challenges that those with smaller accounts do not have. Issues with liquidity of the stock and legging into and out of positions. And so if you do have $1 million account or greater that you're thinking about trading, I strongly encourage you to send us an email, and I've got some additional resources that will help you out. One of the things that I love to do as well is get involved with new technology, and that is artificial intelligence. It's one of the hottest things in the stock market right now. The institutions have been using AI for a decade, and TradeSmart University is one of the first companies that has now made that technology available to retail traders as well. So for those of you who are VIP, who are my VIP friends in the room, whoop, whoop. If you're VIP, we're actually giving you access to our AI that we make available to retail traders. It gives you access to the S&P 500 forecasts and also some technical analysis forecasts in there. You can play around with that, have a great time, see how freakishly accurate the AI is compared to how the stock market actually moves. I think you're going to be really astonished. It's amazing what the AI is able to forecast. Then last but not least, I mentioned this a moment ago, we do have a public trading account here at TSU. I am the primary manager of that. From time to time, we have friends that come in and will help execute the trades there, but I'm the one that's setting the strategy and identifying the trades that we execute. Now, one of the questions I get that we should tackle head on here is typically something like this, and I'm sure it's with a very kind-hearted voice that it comes across. They're like, well, Josh, if you can really trade and make that much money trading, why do you teach? I love the question because, it's good to be skeptical. There's a lot of charlatans in this industry of stock trading out there, and I'm grateful for the question. That's one of the reasons we have the public trading account. And the answer to that question actually points towards the ethos that we have here at TradeSmart University, which is this. I believe when good people have more money, they're able to do even more good things in this world. Some of y'all are excited to create an extra stream of cash flow so that you don't have to work a second job, or you can take the vacation with the kids. Or if you're like my wife, you go and buy freaking goats. Y'all know you can buy a goat for underdeveloped countries, or developing countries, I guess is the correct way of saying it. It's one of the things my wife loves to do, put resources in the communities that really need it. It's my desire to put the tools in your hands that will allow you guys to create that extra stream of cash flow and go out and do those good things. Don't you all know we live in a world where we need some good people doing good things? And I don't know how to say this more humbly, but it's not poor people that build hospitals. It's people with resources. And what I love about the stock market is, again, whether you're starting with $1,000 account or $1 million account, there's an opportunity to generate more. And when you generate more, the opportunity to do more. Very quickly about what you've signed up for here. Foundations of stocks and Foundations of trading stocks and ETFs. Whew. This is why I teach on Tuesdays and Thursdays, because apparently Wednesdays are, my tongue is asleep. Foundations of Trading is a core training program for learning how to trade stocks and exchange traded funds. It's designed for beginners and those of you who are not yet profitable traders. If you're a pro trader that's making 5 figures a month, it's probably not for you. We're going to focus on technical analysis techniques that were pioneered over 100 years ago by a guy named Charles Dow. Perhaps you've heard of him. And all of this training is organized around the principles of the ultimate trading formula. Now, here's that formula from a 30,000-foot view. We like to say making money is as easy as 1, 2, 3, because, spoiler alert, there's 3 steps to the formula. The first step, and you can think of this as your job description as a trader. The first step is to consistently be able to predict the direction a security will move. This is called forecasting, and it's a combination of methodical analysis, which is a skill, experience, and pattern interpretations. Got ahead of myself. Methodical analysis, pattern interpretations, which taps into your creative, and experience. Now, if you don't have a lot of experience coming into this, don't worry. There's tools and techniques that are available to help you get experience at an exponential pace, meaning we don't have to take 5 years of time to get what would be the equivalent of 5 years of experience trading the market. There's things that we can do to speed that up. And for those of you that are VIP members and you're going to be involved in group coaching starting tomorrow, we're going to talk about some of those tools that you can use in order to get that experience much, much quicker. The second step in your job description as a stock trader is to be able to apply the right strategy at the right time. A winning strategy also includes 3 parts. We want to make sure we can identify an opportunity in the market. This is where strength outweighs weakness. You want to be on the side of strength, not on the side of weakness, which is where a lot of retail traders find themselves. It also the strategy needs to have a cohesive set of specific and coordinated actions. And then lastly, we need to protect against failed outcomes. Not every single trade is going to make money. In fact, when we've got your ability to forecast to the point where we want it to be, we're targeting 70 to 75% wins or win-loss ratio, which means 2 to 3 trades out of 10 are not going to make money. So let's plan for that inevitability on the front end. Let's figure out what we're going to do when those trades don't make money so it doesn't wipe out our entire account and we can see consistent progress and growth in our trading account and not have this sawtooth pattern where we're going up, we're going down, we're going up, we're going down. We don't want that. We want to see nice, consistent account growth. Lastly, after you're able to forecast a direction, after you've learned some money-making strategies, the third thing you need to do is apply relentless risk management. It's very, very tempting to focus on all of the opportunity in the market. However, if you manage the risk, that profit will tend to often take care of itself. Everybody gets all super excited about strategy. And candidly, strategies sell. If we wanted to go out and sell millions of books and be a best-selling author in the world of stock trading, I'd write a book on strategies because everybody wants strategies. But the problem is, and here it is on a bumper sticker for you, making money in the stock market is easy. Keeping it is a lot more tricky. I care a lot more about how much money you keep in your account at the end of the day or at the end of the month than how much money you made overall. You know, if it comes in and goes out just as fast, that's not a winning strategy. We want it to come in and we want it to stay there. So as you progress through the foundations of trading and any stock market training that you do, a pro tip here is to get clarity on exactly what you're learning. Ask yourself, which bucket does it fall into? Is this thing that Josh is talking about right now dealing with how I can better predict the direction that the stock is going to go? Or is this thing that he's talking about strategic? Is it giving me entrances and exits and targets and all these things that are very strategic in their nature? Or is he talking about how to manage risk, how to protect yourself from those inevitable failed trades? Because they're going to come. If you don't think they're going to come, that's your first step in learning how to trade the stock market, is to prepare for the trades that don't necessarily make money. Real quickly, this is where you're at in this process. Foundations of Trading is a 3-level program. We're in level 1 here. Today's class is about how to make money trading, the ultimate trading formula. We've got 4 more classes after this, which are part of what you've already registered for. Now, remember, I want to make sure we're super clear about this. Today's class on Wednesday, what is today's date? March 23rd, is a makeup class from yesterday. Technically, this series started yesterday, but because of technological glitches, here we are today with the makeup class. Next week, we're going to be on Tuesday, same time, 2 p.m. Eastern. Tuesday's class, we're going to be talking about how to read the market using charts to identify support and resistance and trends. Class 3 the following week is going to be how to profit when the market goes up or goes down. If you were here for the pre-class show, you saw me talking about a potential point of resistance that the market's coming into. There's a very good chance that about the time we're in class 3, the market could be pulling back. It's going to be a really great time for us to demonstrate to you with real money how you make money when the market's going down. It's super exciting. A lot of people think, I never knew I could make money when the market goes down. Hopefully that'll work out, that timing will work out so we can demonstrate that, putting cash in our jeans as the market's heading back down. And if you missed the pre-class, I'm not suggesting the market's going to crash. I just think there's going to be a little pullback. The 4th class is how to use indicators to simplify your workload as a trader and improve your trading results. And then we're going to wrap up level 1 with some risk management conversations about how to avoid major losses and account drawdown. Now, remember, what did I just say on the last slide? Everything should fit into that ultimate trading formula. So if you're paying attention here, you probably recognize, oh, next week we're going to be talking about how to forecast. The week after that, we're going to be talking about strategy. The week after that, we're going to go back to how to forecast the direction. And the week after that, we're going to be talking about managing risk. See how all that works together very nicely? Now, for those of you that go through Foundations of Trading level 1, you're going to think, this is amazing. How do I learn everything there is to know about making money trading? And I'm glad you asked. For those that want to continue on, there's a 2nd and 3rd level that you're welcome to participate in. I'm not going to talk more about that here, other than to say this. If you've ever gone to a resort, a tropical resort in particular, and been sitting on the beach and somebody comes up to you with a clipboard and they're like, hey, Jeff, would you like to go scuba diving? And Jeff would respond, I would love to go scuba diving, yes, but I'm not certified. And they're like, oh, no problem. We have a program that you can go through. Well, if you've ever had that experience, you know that they scoop you up off the beach, they put you in a classroom, you've got about 6 or 7 hours of training, and you're like, okay, lift the mask up, here's the regulator, all these things. And they're like, okay, let's go scuba diving. And they take you to the coral reef, and you have what? You've got your buddy who's a certified dive master, and then you go down together and you look at all the beautiful coral that's down there. But at the end of the day, you had the experience, you saw the coral, you saw the potential that there is if you're a scuba diver, but you're not actually certified. You went through like a little intro to scuba class and they gave you the experience. Think of level 1 here as like your intro to the stock market class. We're going to dive in. We're going to place trades. You're going to see money being made. The account's going to go up. It's going to be amazing. And at the end of the day, you're going to be qualified to move on to level 2 and level 3. We do that so that you can experience this and see if stock trading is for you. It's not necessarily for everybody. So I hope you'll take it seriously. This content is very practical. Like I said earlier, it's the same content that I put my own kiddos through before I let them trade the stock market. And at the end of the day, I hope that most of you guys will continue on to level 2 and level 3. More on that later. Let's talk about some class rules here, and then we're going to jump right into the content for the first session. First of all, it would help me out if your questions go in the Q&A pane. I see a question in there. I'm going to look at that in just a second. Questions in the Q&A pane. Chit chat goes in the chat pane, and in that Zoom chat pane, if you could set it to go to everybody, that would be helpful so we can all participate and see who's interacting. Now, we also have friends on YouTube for this particular training. So if you're on YouTube, all the questions in chat go in one area. And my friend Chris and my other friend Chris are in here. They're going to be monitoring YouTube and making sure your questions get answered there. If it's something I need to answer, they'll interrupt me and ask me live. Go ahead and turn that phone over for the next 45 minutes. Turn off social media. Nothing good happens on social media in 45 minutes. And instead of looking at things that take cash out of your jeans, a la Amazon Prime, let's build a skill here together that will actually put cash into your jeans. But seriously, turn the phone over and pay attention. My phone's turned over. It's on silent. There we go. I'm yours for 45 minutes. And if you'll engage with me for 45 minutes, I think I'll teach you some things that are going to be very helpful. Last but not least, have a good time and edify each other. We always have great students and great participation here at TradeSmart University. Every now and then we get a jerk. If you're a jerk, and that is a completely arbitrary, subjective qualification, but if we determine you to be a jerk, we're going to go ahead and exit you from the program. There's enough stressful things in this world that we don't need people who are know-it-alls or trolls or whatever being here, annoying any of the instructors or students that are in class. So just be kind, edify, treat others the way that you want to be treated, and we're not going to have any issue. With that said, type a 1 in the chat pane if you're excited and ready to go. I will tell you I am staring at a wall and a monitor, and so when I see your chat pane, when I see the chat pane erupt, it lets me know that you guys are excited and helps me put more energy into the equation. I wanted to read Jeff's question here. When I start the 2 o'clock training session, will you please explain whether your class parallels or complements Scott's boot camp sessions? All right, so boot camp is a separate program that's going on. That's a paid program that's happening right now. And I would say it both complements and parallels. The difference being Foundations of Trading, which is what you're in right now, is really designed for the beginner and the person who's not had much experience with the market at all. If you've done some trading, you know technical analysis, you're not confused by what a stock chart is, you know how to annotate it, all those things, then that's going to be more the Traction Bootcamp route for you. Both of them are good. You could do both of them at the same time. The schedules don't conflict, so I encourage you to do both, but that's kind of the difference between Bootcamp and Foundations of Trading. All right, I see all those ones. Jeff, Robert, Chris, Gabe, Dennis, all of you guys. Awesome, awesome, awesome. Let's talk about whether you want to be a trader or an investor. Whoops, there we go. And as we kick this off here, I want to be crystal clear because there's people on the internet, believe it or not, who like to dog one or the other. Traders who like to poke at investors, or investors that like to poke at traders, and I think that's dumb. I think there is reasons to be trading the stock market, and I think there's reasons to be investing in the stock market. Just don't confuse the strategies that go with each group. And candidly, I do both. I have money that is invested in the stock market, and I have money that I use to trade the stock market. So here's the difference. Traditional investors typically buy and hold their positions. They need the market to go up. If you are trading or investing in a mutual fund, God bless you. Sorry, Dave Ramsey, we have to disagree on mutual funds. But if you're doing that, there are actually constraints on mutual funds that can prevent them from making money as the market goes down. So just be careful there. That's why a lot of people who are invested need the market to go up. That's why they freak out when it sells off 11 or 12%. Typically, investors trust other people to manage their money. Positions typically last for a year or more, so they can take advantage of the discounted long-term capital gains, which right now is 15%. And they focus on saving money. They put the money in the market. They don't plan on touching it for several years. And if they get 15 to 20% annual return on their investments, they are going to be super happy, right? Some of you are like, my account is not 15% in 2022. It is true. We have just completed the sixth worst first 50 trading days. That makes sense. The first 3 months have been the 6th worst on the books with the S&P 500. So the good news for those of you who are curious about investing and putting cash into the market right now, typically after those terrible starts, the end of the year, the back 3 quarters of the year will outperform, will overperform. So have we hit the bottom? I don't know. We'll talk about that in group coaching on Thursday. But generally speaking, investors are very happy with 15 to 20% return year over year. Now, active trading is a totally different sport. It's like the difference between baseball and cricket. Completely different sports, completely different languages in the sports. They just kind of look the same and they play on the same field, right? Active trading is where you're consistently or constantly buying and selling. You don't care if the market goes up, you just want the market to move. Typically, traders are managing their own trades. Positions last from hours to a few months. Our focus as traders is on creating money, creating a stream of cash flow, and we're often measuring our returns monthly. Now, if you're a day trader, you may measure your returns weekly, right? We're not necessarily advocating for day trading or against day trading. I'm teaching you the principles here. We'll get into those strategic conversations later. So let's see what this looks like in a real chart. Here's Boeing on the screen. This is a solid blue chip company. It pays dividends, right? So that's a way to put some extra cash in your jeans as an investor. Many of you probably have this company in your portfolio if you've got a retirement investment account. Let's take a look at this by drawing a couple lines on the screen. We can see that it sort of bounces around in price between $330 and $380. Now, this as a stock is an investor's worst nightmare because it doesn't ever go anywhere. At best, you got in at 330 and then you got out at 380. And that's if you're a stud at picking out the highs and lows of the trend. And if you subtract the close or the open from the close, you're going to discover that there's about $50 to be had in this particular company. Not a great return over 2 years, 16% to be specific. I'm moving my Zoom controls around. For some reason, they were covering up my slides. 16% over 2 years on Boeing is not a great investment. However, this is a trader's dream come true because a trader sees, Boeing seems to sure bounce back and forth between 330 and 380 a lot. So all I need to do is get in at 330 and get out at 380. Just took me a few weeks to get that done. But then they came to class 3 of Foundations of Trading, learned how to make money when the market goes down. And so they put another $50 cash in their jeans when it went back to support, $330. And then they put another $50 cash in their jeans when it went back up to 380. And again and again and again for actually 8 rotations over those 2 years, 8 minimum. $50 each time times 8 turns is $400. That, my friends, is 121% return on investment in 2 years. 16%, 121%. Now, again, I'm not dogging investors, and I'm not even saying that this would be a great investment stock to go out and get. There's other stocks that obviously perform much better than this. I am just saying there's an opportunity for both in the market. And doing 121% on a stock over 2 years with relatively consistent back and forths is a pretty good way to put some extra cash in your jeans. As I've said a few times, investing is not bad, just don't confuse it with active trading. Let's talk about some of the tools that you're going to need as an active trader. So we're going to put investments on the side and we're going to focus on trading from here forward. The first and most important tool that you need, maybe it's the second most important tool that you need, is charting software. If you were here before class started, you saw me open up my charting software. We were looking at the S&P 500, just kicking it around a little bit there, doing some forecasting on where we think it might go. For me, that software is called TradingView. That's what I use. I also have a Thinkorswim account. I like TradingView. It's hard to teach an old dog new tricks, I suppose. Both of these are excellent. A third option for you is the TradeStation desktop software as well. Now, a couple little differences here. TradingView is a standalone application. So you would go and sign up for an account with TradingView, and if you wanted their premium service, you would actually pay them some money and get access there. Now, Thinkorswim and TradeStation are all going to be part of a brokerage account, and they will be for free. What's that from? I don't know, it was a movie. It's for free. So if you like free, then take a look at Thinkorswim and TradeStation. I believe they might require you to put a deposit down, to put some cash into the brokerage account so they know you're serious. That may or may not be true. Fact check me on that. I've just never tried to have a brokerage account with $0 in it, so I'm not sure if they would let you use all the tools or not before you fund it. So anyway, there you have it. One of the nice things about TradingView is it's HTML, which is the language of the internet. So you can pull it up on your iPad, your iPhone, your Android. They actually have apps now for TradingView, and it looks just as beautiful as it does on your computer screen. So that's one of the reasons that I love TradingView. Now, Thinkorswim and TradeStation also have apps. They've caught up with the 21st century as well. So you really can't go wrong. But if you want your charts to look exactly like mine, check out TradingView. Side note, I don't get any benefit from pitching any of these companies or softwares. Now, for sure, the most important thing you need, if charting is the second most important, the most important thing you need is a brokerage account, because that's what brings you to the table to be able to trade. Personally, I use both Schwab and also TD Ameritrade. And I wrote sort of in here because Schwab just bought TD Ameritrade. So they're really one company, but they're also individuals. And I have accounts with both. I was with Options Express back in the late 2000s, and they got bought up by Schwab. So then I was using Schwab with the old Options Express platform. And then recently, like this year, 2022, I just opened a TD Ameritrade account because Burgess and I are testing some unusual options activity strategies. And that data is in TD Ameritrade, but not Schwab for some reason that I'm not sure why. But anyway, I got TD Ameritrade set up, and ironically, it's owned by Schwab. So it's only a matter of time until they probably merge those two brands somehow. Another option for you is TradeStation. So Jeff is just asking about Scott Landers and Bootcamp. Scott uses TradeStation. Alfonso Esposito, he uses TradeStation. It's a great brokerage. You can't go wrong with it. Also, if you're an international student, Interactive Brokers is a good option as well. Canada, European traders, Interactive Brokers is going to serve you very, very well. Now, you're not going to get the $0 commissions like you get here in the United States, but they are very good, very reputable. I need to put a slide in here because everybody always asks when I teach this, what about Robinhood? Or what about, is it Tasty Trade is the other one? You know, I didn't put them on the list for a reason. So I don't have any personal bad experiences with Robinhood. They just also don't have the best reputation in the world either. So it's kind of like, you know, if you want to play with the big boys, use the big boy accounts. Schwab, TradeStation, TD Ameritrade, Interactive Brokers. If you want to play a game, maybe sign up with Robinhood. All right, there, I said it. I also, if you want to see me get on a soapbox at the end of class, I think the heat that Robinhood took during the GameStop debacle thing, I think that was unjustly targeted at them. And there's a lot of things that happen behind the scenes that don't affect you as a retail trader, but at the same time, it kind of affects you as a retail trader. And so that was one of the reasons they had to halt trading. It's way outside the scope of what we're talking about here, but great fodder for group coaching if you guys want to know my opinions on that. You also need access to paper or simulated trading. Now, TradingView is going to provide this. Thinkorswim has a simulated trading environment. In fact, Thinkorswim and TradeStation in particular, all you do is I think TradeStation, you have to log out and log back in. With Thinkorswim, you just literally flip a switch and the color scheme of your account goes from green to orange. And when it's orange, you know, oh, I'm trading with fake money. Side note here, I encourage everybody to trade with virtual funds first, just to get used to the platform and how it all works, and to not destroy your real money trading account by doing stupid things. And we're all going to do stupid things as we're learning. Some people feel like you should go through basic training when they're shooting live rounds over your head. I don't know if that's a good idea or a bad idea, but if you're the kind of person that just needs to feel like you're going to lose real money when you're starting, then please use a reduced amount account. So if you've got a $10,000 account, maybe start with $1,000, you know, carve off 10% of it to practice with because I promise you, you're going to do some things wrong as you're learning. And I would prefer for those learning experiences to not take you out of the game. Then eventually, expeditedly, we'll move you towards when you're ready to trade that full-size real money account, hopefully by the end of level 3 of Foundations of Trading. But that's just my little word to the wise there. TradingView, Thinkorswim, TradeStation, they all have great paper or simulated trading accounts. Journaling is another important thing to do. We're going to come back to this in level 3 when we start talking about designing your personal trading plan. And the reason that the journal is important is for 2 reasons. One, it keeps you accountable to what you said you were going to do and what you actually did. But number 2, it allows you to go back and do a post-mortem on some of those trades, ones that worked out really well or ones that didn't work out at all. And that's going to be the foundation of developing your trading plan. And we lay out a process to go through all of that in level 3. But if you don't have your journal, like if you just have the aha moment when you get to level 3 that, oh, I should have been keeping track of my trades, then you're going to be delayed in creating that trading plan. So I encourage you right now, even as you're learning, start journaling. I used to be a big advocate of making this paper physical. As you can see now, my digital pen. We've had some discoveries in our family that my wife in particular is like deathly allergic to mold. And it turns out that every piece of paper is a walking mold factory. So we have gone paperless in our family, and I now use iPads and digital tools. So I'm a fan of digital. I'm also a fan of physical. If you come to group coaching tomorrow, I'll send you a copy of the digital journal that we created here at TradeSmart that you can either use or model for yourself. Last but not least, bonus points if you have access to artificial intelligence. It really is a powerful tool. The artificial intelligence that we use does 1 times 8 to the 80th power. I forget what it is exactly. It's trillions of calculations that it's doing to give you a forecast on any individual stock. And it's not black box trading. I wouldn't trust it to that level, but it will let you know if you've got some crazy ideas. And it's an opportunity to kind of stop and check your analysis as a dual confirmation, if you will, about what you're really looking at. With that said, let's jump into some world of technical analysis. We're going to start talking about charting today. We're going to pick up this conversation next week, next Tuesday. For those, the attendance keeps going up. So for those that are logging in, this is a makeup class. We'll be back next week on Tuesday, 2 p.m. Eastern Standard Time. Intro to charting. Charts are the starting point for all of your trading decisions. It is like your trading roadmap. Once you learn the language of these charts, it will tell you the story of the battle between supply and demand. You should underline those 2 words in your notebook, supply and demand. This charting pattern right here, that blue line that's ascending and the other blue line that's horizontal, this is a very, very specific charting pattern. In fact, it typically has a bearish breakout 60-40. 60% of the time, this will have a bearish breakout. This is the SPY, which is the ETF that tracks the S&P 500. And this is right before the big crash that we just had. If you go look up at SPY, you'll see this right here. That was the top. In fact, we were looking at this candlestick right before class. That's the candlestick we were drawing fibs on. And of course, we came right on down. A genius chart pattern right there. And that's why I say, once you learn to read these charts, it's going to be your roadmap for success going forward. Let's talk about some of the benefits that this is going to offer you. Charts show you the historical movement of stocks visually. Stock trading is a very visual game. If you're an artist, a musician even, an architect, anything like that, you're going to find yourself very comfortable with this idea of charting. Musicians are my favorite, and that was my background all the way through college. I was a professional artist, musician, and I realized I had this aha a few years ago. Stock trading is not that much different than what I did as an artist, because I would look at a chart, we called it music, and then I would translate that into actions that I took on my instrument. Now I look at a chart, we call it a stock chart, and I translate it into actions that I do in my broker. One made music, the other made money. There's no money in music, by the way. So one of them puts cash in my jeans, one of them consistently took cash out of my jeans. That's what I love about the stock market. It consistently shows visually the story between support and resistance, or supply and demand. The stock chart identifies trends. It highlights decision points in the market. We call those pivot points. More on that next week. It also visualizes sentiment. That's the feeling, if you will, that people have who are trading a particular stock, whether they're bullish in sentiment or bearish, they think it's going to go up or they think it's going to go down. And stock charts can be notated as desired to assist with your forecasting future price action. So you saw those blue lines on that previous chart. That's a notation. You can see these moving averages on the example on your screen right now. You can even write little notes on the screen and keep track of things that are going on. Now, there's two main chart styles that you need to be familiar with. There's a line chart, and then there's a candlestick chart, which is like the younger brother of a style called bar charts. Now, line charts are very helpful when you're beginning. Candlestick charts are going to be more of the pro style charting. When you get into your charting application and click on the charts, because you want to go find your candlestick charts, which is great, you're also going to see a bunch of other chart styles listed as well. Aiken Ashi, Renko, point and figure. This may as well be Egyptian hieroglyphics. They are wackadoo. I mean, I'm not saying they don't have a place in stock trading, but like point and figure in particular, it literally looks like this. You know, there's going to be a bunch of O's and X's on the screen. And I bring that up because if you accidentally click on one of these and your chart goes bonkers, you need to make your way back to candlesticks or line charts. Now, I encourage you to go click around. Be a confident clicker in your charting application. And if it gets completely screwed up, we'll just hit the button and reset it back to the defaults, and you're going to be just fine. Doing a deeper dive into line charts here, they're constructed using the daily closing price asterisks. You can change the information going into the line chart to be either the open, the high, the low, or the close of the session. By default, every charting application is going to open using the close, or is going to, the line chart's going to default to using the close of every single session. Again, I bring it up because it's going to be an option for you to change, and you're probably going to go in and change it because you're a confident clicker, right? And if it happens to get changed, we'll just put it back to using the closing price for the line chart. It's created then by plotting a line from point to point, which creates several benefits for us. First, it's very easy to see the price action and trends. I oftentimes use a line chart on my phone because it's very easy to see what was going on. It also helps with beginning support and resistance line drawing skills. Next week, we're going to start getting into annotating these charts, and it may serve you better to begin with a line chart and then move to a candlestick chart. When we start drawing on the screen, you may want to use your line chart first. There are some inherent weaknesses to the line chart, however. First of all, it does not tell us the whole story because it only shows the closing price, which means it's going to be very, very difficult to trade from by itself. Now, the older brother, or not the older brother, the bigger brother of the line chart is the candlestick chart. Candlesticks actually include all of the open, high, low, and closing price information for that session. Typically, we're looking at a daily chart, but maybe it's a 15-minute chart, and each candlestick represents 15 minutes in time. The color of the candle will show the closing point relative to the open point. And then the wicks of the candle show the highs and the lows. So here's what this looks like practically. The open or up or white candles will have an opening price. Then the wick designates the high and the low of the session. And because this, of course, is a white candlestick, the closing price is going to be higher than the open. That's why we call it an up or a white candlestick. So we opened here, we had a low, we had a high of the session, and then we closed higher than we opened. The inverse to that is a dark candlestick, where we have an open that's up high. We have the high and the low of the session identified with the wick, and then we close lower than we open. So the dark candlesticks are lower closes. Look already how much more information you have on the screen with just one little candlestick. It's beyond 4 times as much information because it tells you what the action was in that given session. It's a very, very, very powerful analysis tool. Some of those benefits are, it tells you the complete story of the trading session. It also reveals important gaps. Notice that you didn't see any of these gaps that occurred on the line chart. Now, When we get into more advanced analysis, particularly in level 2 of Foundations of Trading, you are going to learn that gaps are like the magic cipher that makes everything make sense on the stock chart. Remember back in World War II, the Germans had this Enigma machine and they could send messages and you had no idea what it said unless you had the cipher code. Put the cipher code in and it's like, everything is crystal clear now. That's what gaps are in the stock market. They're extremely powerful. I could write an entire course on gaps all by themselves, and you don't see them unless you're on a candlestick chart. It's a huge benefit to trading candles. Also, candlestick charts or candlesticks themselves begin to form recognizable patterns. So we saw a chart pattern earlier, that ascending triangle. There's all kinds of candlestick patterns out there as well that can help bias your forecast in a correct direction. Now, the weakness of a candlestick chart is if you're unfamiliar with them, it can look like a whole lot of data on a screen all at once and get congested. I think you'll get used to them pretty fast, and I encourage you to try to use them as much as possible and build that muscle reading candlestick charts. Here's a very practical example of the difference between the two. On the left, we have a line chart here, and you can imagine driving home, the radio announcer gets on the microphone and he says, the Dow Jones Industrial Average had another tough day today, losing 157 points after so-and-so in DC called this and that, such and such. Y'all have heard that, right? And you're driving home and you're like, oh my gosh, 157 points. My 401k mutual funds, right? You're freaked out because the Dow went down 147 or 157 points. However, if you were a trader and you were looking at a candlestick chart, now you're not on your phone driving. That's dangerous. Don't do that. But if you were not driving and you were looking at a candlestick chart, the trader would say to themselves, wow, demand was really strong midday. So at some point, we opened here, we had traded all the way on down, and then we came right back up. In fact, buyers drove the price up over 350 points from the low of today's session. The trader is saying, that is a candlestick pattern. In fact, the name of this candlestick pattern right here is a hammer. It occurs at the end of a downward move. You've got that long lower wick. You've got a small bodied candle, and it's indicative of a stock, or in this case, the Dow Jones Industrial Average, getting ready to continue on up. And of course, what happened? It continued right on up. This is just from a couple weeks ago. I grabbed the screenshot. If you were looking at a line chart and you're an uninformed person, you were probably freaked the heck out because this is when we were in that free fall. But if you're a trader, you're like, I think I found the bottom here, and you could start biasing your trading decisions to the upside. Candlesticks are very, very powerful tools, and I'm excited to jump in and teach you all about them next week. We're just a couple minutes over time here. So let's wrap up with some homework. I'll be glad to take your questions. If you're on YouTube, Chris, maybe you could bump me those questions up on YouTube. Here's what I'd like you to do before we meet next, what day? Next Tuesday. Remember, today's a makeup class, so we're going to get back on our Tuesday schedule starting next week. Your first action step is to do a little research and make a decision on what charting platform you want to use. Okay, do that today. Don't get bogged down with this. Just, if you're confused, use TradingView. It's free. You're going to get bombarded with the ads on it. If you hate the ads, sign up for their cheap premium package. After you've made a decision, go ahead and get that trading account or get the charting account set up. So if it's TradingView, then set up your account with TradingView. And I make this as a separate bullet point because if you want to use Thinkorswim or one of those other ones, you're going to have to walk through that broker process. Notice I do not say run out and get your brokerage account set up here. There's two reasons. One, it's like crack to an addict to have a brokerage account. And you're like, I just need to trade something. Don't do that. Just send Chris Burgess your money if you want to give it away to somebody. I would rather actually that you get a couple classes under your belt here. Let's talk a little bit about risk management, and then we'll fund your account, because I like seeing accounts go up, not take the new trader cliff dive and then start catching some air, assuming you haven't run out of money yet. So I'm hesitant to recommend getting your brokerage account set up. The other reason is it can be confusing. And I don't want that to be intimidating, but it took me probably 10 minutes a few months ago to get that TD Ameritrade account set up, and I knew what I was doing. I knew every single question. I knew what hoops they were going to want me to jump through. If it's your first time doing it, it's going to feel a little bit like setting up a bank account, and you got to go and give them your tax ID, because when you start putting fat stacks of cash in your jeans, they're going to want to tax you on that. It's, that's the price that we pay to play here. You got taxes in the US. So set up your charting account. Don't get overwhelmed with a brokerage account. Once your charting account is set up, go find 10 plus companies. If you don't know what 10 companies to look at, here's a good place to start. There's a cool thing called FANG-M. It's the 6 highest capitalized companies in the S&P 500. Basically, these 6 companies are responsible for moving the S&P 500. Stands for Facebook, Amazon, Apple, Netflix, Google, which isn't actually Google. What is that new Google ticker? Anyway, you guys can find it. Google, and then Microsoft, MSFT. Those are the 6 highest capitalized companies. 1, 2, 3, 4, 6. Then after that, go look at things you're interested in. You like John Deere tractors, go look at John Deere. If you like, commodities, look at US Steel. What is US Steel? That just left me. It's got an X in it. Is it X? I think it might just be X, is US Steel. I think somebody just typed it in, but I can't see through my Zoom tool. Yeah, it is X. USO is oil. It's an ETF that tracks oil. Find a big name company, Walmart, and look it up. Look at 10 companies. Then the next thing I want you to do is look at their line chart and compare it to a candlestick chart and see if you notice some things. Budweiser, Anheuser-Busch, both of those companies are traded internationally. They're super gappy. They just bounce all around. You're going to see gaps between every candlestick. Other companies like Facebook or Amazon, they're not quite as gappy. There's less space in between those candles. You're going to see that on the chart. And I just want you to be curiously observant. I would never, ever suggest somebody trades on a feeling, but at the same time, the more of these experiences that you load up into your brain and you're looking at them curiously, like, that's interesting. Your brain starts storing this data and you start getting an idea of how the market moves and how it works. And while not an approved analysis strategy, it certainly can become like a 6th sense. John Deere is a great example. I was looking at a trade potential on John Deere. I just didn't feel good about it. I didn't take the trade, and it went exactly opposite the direction that I was thinking with my conscious mind that I was thinking it should go. But my subconscious mind with 25 years of experience said, let's chill out on this one. There you have it. Next, review the midweek emails. You've got some things that are going to be coming at you, basic kind of beginner content. What is a stock? How's the exchange work? All that stuff. Read through those. Just kind of get a foundational understanding. I'm not going to cover some of that super basic information here. I want to focus on the difference that's going to make the difference and put cash in your jeans. But if you're curious about what a stock is, read that email. If you're curious about how the exchanges work, read that email. Then, we've talked about this before. Make sure you attend the group coaching session. It's for our VIP friends. It'll be Thursday, tomorrow at noon Eastern. Now, with that said, this first group coaching, we're going to broadcast live to everybody. So if you kind of want to kick the tires and see what group coaching is about, you're welcome to come to that first free session live. I'll do a walkthrough of TradingView, the application, and we're also going to be talking about some level 2 and level 3 content. The cool thing about group coaching is all 3 levels are in that same group. So you're going to get to see what they're working on, and they're going to remember what you're working on. It's really a fun, very interactive, engaging environment. And then go ahead and join Slack Asterix. I meant to update this slide. We're changing this technology from Slack to Discord. What it is technology that allows you to message me and Chris Burgess and the others in the team directly. So it's a community chat. It's not Facebook. Everybody dislikes Facebook, as do I. So it's more like a private room where we can just have a conversation in between classes. I'm very engaged in there. Chris Burgess is very engaged in there. I have people that private message me, send me charts. I have a friend, Money Man, He's in level 3 right now. He sends me probably a chart every single day. Hey, Josh, what do you think? And don't abuse me, but to some extent, as long as I've got time or I'm, waiting for the kids to get out of an activity or whatever, I hop on my phone and here's what I think about it. I love engaging with traders. One, it makes me a better trader as I'm accountable to the things I'm teaching you guys and doing the things that I say. And two, it's just it's always a fun conversation to have as the ahas and the eyes get big and they're like, I see it, or I made my first $1,000, or I doubled my account, or whatever the milestones are that people are achieving. I love it. Next week, we're going to be talking about reading the market. Remember the 3 ultimate trading formula: pick a direction, strategy, risk management. Next week is all about forecasting or predicting the direction a stock is going to go. As a quick overview of the VIP benefits, and I'm going to stick this link in the Zoom chat for those that are in YouTube. Chris Burgess, maybe you can pass this on over there. There you go. If you're thinking to yourself, man, I kind of wish I'd have become VIP. I feel your pain. And this is how you do it. The link is there. VIP members get lifetime access to the recordings and the notes. So if you want to just download my whole slide deck and highlight it or notate it, it's got the slide and then there's some space to write next to it. And it's a really convenient way to make sure that you don't miss a thing. You also get access to that live group coaching and the recording, as we talked about. So yes, we're live streaming it. No, you're not getting the recording if you're not VIP. If you are VIP and you cannot attend live, email me or put on the Discord your question and I will do my best to answer it. I've never yet had a group coaching where I haven't had time to answer every single question, but just be reasonable. You also get access to me in the Foundations of Trading community on Discord, as I mentioned before. We're also going to give you access to the artificial intelligence on the S&P 500. Now, Deep Sky, that's the name of the application. Deep Sky tracks the whole market, but for the VIP friends, as you're just getting started, we're going to restrict that to the S&P 500. And I think you're going to find it very, very useful as you combine it with your bonus strategy. So I teach this strategy. It's by video. You can go watch it right after class right now if you want. And when you combine the strategy that I give you with the artificial intelligence, you put those two things together, it has an unbelievable win-loss ratio, oftentimes averaging 90% win-loss ratio. It's not a high ROI strategy, but it's a more frequent and higher win-loss ratio strategy. It's very, very cool. We're also going to give you a 14-day guarantee. So get access to this stuff, try it all out, watch the whole strategy, record it. I mean, whatever you want to do. Like if you want to be that person, you can. We have a no questions asked 14-day guarantee. And I do this because I want to remove every ounce of risk. The stock market carries with it enough risk. You don't need to feel risky about diving into something you're uncertain of in terms of the education. So get it, use it, try it. And if you want your money back, we'll give you your money back. In fact, I'll go this far to say, if you don't feel like it's $470, 10 times the value that you pay for it, I'll still give you your money back. We've done this program now for 13 years or a variation of it. And I think I could count on one hand the number of people that ask for a refund. It's just that good. It's that much value. That wraps up today. We went an hour. We're going to keep these to 45 minutes going forward. My apologies. I don't know how I got off. As we end, I'm going to hang out here. I'm happy to answer any questions. And I'd love to hear what you're looking forward to doing with some of that extra trading money. Remember, we said when good people have more money, they can do even more good things. What's that look like for you? Do you have any nonprofits that you're excited to support? Do you have any activities that you're excited to do? Do you have any purchases that you're looking forward to making? Let me know what that is in the chat pane. I'll hang out here for a minute. $47 is a one-time fee. Yes, Dennis. Yep, no additional charges. Great question. That does bring up, if you're one of our all access members, and twice a year we open up all access, which is what it sounds like, it's all access. It is included with your all access purchase. Now, all access is not coming around again for another 4 months. So, I mean, you're welcome to wait for that, but I wouldn't recommend it. So there you go. But if you are here as an all access member, you can enjoy it.
I want to mention too that like with the amount of trades that we talk about in the group coaching and in the Slack channel and stuff, like people generally make back that $47 within the class, you know? So yeah, it's risk-free in the sense that like, if you don't like it, we can give you your money back. But it's also risk-free in the sense that like, we're going to be sharing trades and stuff. And it's so easy to make that money back is what I'm trying to say. And I think most people are able to do that in the 5 weeks.
So I'm going to show you this trade we did. This is one of the trades we just did in the last group that went through. Here's Jets. And so this was Slack. Slack looks a little different than Discord. Discord is way cooler. Okay, but you can see 8:20 in the morning Central. So this is 10 minutes before the market opened. I post this trade right here, Jets. And so you can see about 22.14 was the entry on this. And I want to come back here to Jets and show you guys where it went. I don't know if Mohammed's in here. Actually, I still have the trade pulled up here. 22, what was the actual? I think I got bumped. 22.14 is what the screenshot was. So this is just 20 cents higher. But that screenshot was taken right here. And of course, Jets came straight on down. I actually exited right there. We've got a student in, he's in level 3 now, Mohammed. He rode this thing all the way down. He exited down here. It was awesome. I traded an option on this. My output was 100% return on that option. Options trading is beyond the scope of what we're teaching today, but I had 100% return on that investment. Mohammed down here was closer to a 400 plus return on his investment. And then that crazy guy, he wrote it back on up too, which I did not necessarily advocate. Although look at this, Chris, it's forming an interesting little pennant pattern there. So, and then there was another one. This was the VIX trade we talked about in class right here. So VIX I got into and we published, it was back here. So it was not so awesome for a little bit, but then VIX exploded and I got out right there. And this was the exit message that I was sending the students. Where is it? For anybody keeping track, would have been additional 6R. Where is it? All right, here it is. Close my VIX trade today. And then I wrote DOE because I got out here. That was a 2R trade, which we're going to teach you what R's are here in just a minute. Had I stayed into it for that next day, it would have been an additional 6R for a total of 8. So didn't make as much money as I could have, but I mean, a 2R trade is very, very, very good. Those 2 trades alone paid for VIP and level 2 and 3 at the same time. So that's kind of an example of what you can see. So here's Money Man. I told you he's always talking to me. He said, what's your opinion on the rate hike? Is it a bearish market? And so I wrote back, it's not an easy answer. And I basically told him that it has little to no impact unless the size of the increase is exponential one direction or another. And then of course, what would the market do? Exactly what we said. The rate hike was back in here somewhere. I forget exactly which day it was. I think this was the day of the rate hike, and obviously not a bearish market. In fact, well, that's Jets, but the S&P looks similar, not Jets. S&P looks similar. Yeah, here's the Fed announcement, and then we took off. So definitely not bearish, and saved Money Man a lot of heartache because he was trying to guess bearish on that. So anyway, there you go. That's for your edification. What other questions do you have? Let me see. We got 7 people on YouTube. I can see that screen now that my slides aren't live. Let's see if anybody said anything there. I have to scroll down. I can't get it back up. There we go. Awesome. All right, we're going to leave it there. Blessings on you guys. I'll see you tomorrow. Group coaching, whether you're VIP or not, we're going to stream it live. Get signed up for VIP. Take advantage of all those other bonuses and goodies. And then, of course, after this week, all of the group coachings are going to be exclusive to the VIPs and level 2 and 3 students. So I'll see you guys tomorrow, group coaching. Next week, I'll see you same time, same place, but on Tuesday instead of Wednesday. Blessings, everybody. I'll see you soon.